Hey, welcome back everyone. I know I'm uploading this video after a long time on YouTube because I was busy in School of Price Action. If you don't know, then it's my private group. So I was so focused on that thing. That is the reason why I have not uploaded any video, but I'm back with a new video. So what is the topic of this video? So it's high and low. Okay, so it's the first PD array in PD array matrix, and not only the first but strongest and most important, most crucial PD array in entire PD array matrix. Okay, if you just master the high and low, and if you manage your risk, then you can trade this market by using just high and low. Okay, it is that much important, and it is that much crucial. So I'm gonna talk about this thing in this video. I'll explain to you in the chart, okay, the high probability condition and low probability condition, okay, how you use high and low, when market take high and low, and when market front run the high and low, it create the higher low or lower high. Okay, I'll explain to you when this happen in this video. So let's start this video before wasting any more time. So the first thing is the high and low. I don't need to explain what is high and low and how it look like. Okay, if you are studying the ICT, and if you are even new and you just enter in market just 2 months ago, 3 months ago, then even though you know very well that this is the high and low, okay, and I don't need to explain in detail that how high and low look like, because it's so basic thing. Okay, so but you need a basic understanding, or let's say intermediate term level understanding about the market structure, to understand why market is gonna take this high and take this low. Okay, and why market are not gonna take this high and take this low. Okay, so for that you need a market structure understanding. So watch the ICT's 2022 mentorship for that market structure understanding. He explained very well how you should read the price action, how you should understand the market structures, that this is the structure and price is gonna break this structure, and price is not gonna break this structure. So watch the entire 2022 mentorship for that. But for now, in this video, all you need to focus on is high and low, and it is how it look like. I just drew this presentation, and it's so simple. Okay, it's not complicated, and you can clearly see here this is the high and this is the low, and that's it. So you find high before the main high, and you found the low before the main low. Same thing after we form the high, you found the lower highs. It is a market structure, as I said. So watch the video from 2022 mentorship. I think it's a episode 12. If I am right, then it's episode 12 about the market structure. So watch that video. So let's go on to the next one. And what is the next one? So it's a PD array matrix. So why I said the high and low is most important and most crucial, and why I said that, so it's because it is a first PD array in premium area of the range, and same thing, it is the first PD array in discount area of the range. So we go from higher to lower in premium area of the range, and we go from lower to higher in discount area of the range. Okay, so in both range, in premium and discount, the high and low remain the first PD array. So I put this low here, but it's just for explanation. So the old high, OLD, it means old, so it's old high, and here it's old low, not high, and here it's not low, only high. So but it is the first PD array in premium. It's a first PD array if high is the first PD array in premium area of the range, and the low is the first PD array in discount area of the range. Okay, so the entire PD array matrix start from high and low. If you look at the premium, then it start from high. If you look at the discount, then it start from the low. So high and low is the first thing in entire PD array matrix. So that is the reason why it is so much important. Okay, so that is the reason why I said you can trade the market by using just high and low. Okay. So now there is a few things, 3 things that you should remember, or you need to understand that thing before I move on to the chart. Okay, so what is that 3 things? So let's go on to that 3 things. So the first thing, okay, about high and low is the algorithm that move the market. It don't know where you put your stop loss. Okay, because it's an algorithm, it's not a human. Okay, it's an algorithm. So why take the high and low then? It's because it's how it's coded. Okay, those people who control the market, they don't sit in front of a laptop or computer, okay, in front of their broker account, okay, in front of that portfolio. They have created the algorithm, and the algorithm manage the entire buying and selling. Okay, they don't do that. Yeah, in some case ICT said that they manual intervent and they sell so much and crash the entire market. In some case, like event like Corona, and if any conflict happen in the world, in geopolitical world, so they manually sell and buy, but it happen once in a years. Okay, once in a years that they manually intervene. Okay, they don't they use buy and sell button and move the entire market. They don't rely on algorithm at that time. Okay, so majority of the time means out of, let's say, 99% of the day, algorithm move the market. But if there is something happen, big event or something happen in the world, they manually move the market. Okay, but most of the time, 99% of the time, algorithm have a totally control on the market. Algorithm move the entire market. So algorithm is a computer program. It is not a human. It don't know where you live. It don't know how much money you have in your portfolio. It just move the market. How it move the market? The way it coded, the way it programmed. Okay, the way they program the entire algorithm, the way they coded the entire algorithm gonna move the market according to the code or according to the program. Okay, and that's how computer program and algorithm works. So algorithm, you can say that it's a artificial intelligence, machine learning. Yeah, and we create that thing, so it is gonna follow our order. Okay, so algorithm is gonna follow their order. Okay, so don't think that they know that you put your stop loss at this high and at this low. Okay, I have seen many ICT trader that say that whales and market maker and smart money are gonna manipulate the market to the downside. It is gonna take all the retail stop loss and then it will move the market higher. No, they don't do it intentionally. Okay, algorithm is gonna do that thing. Okay, and why it gonna do, and why do, Guru? Okay, the first question, why it do? Because that's how they coded. That's how algorithm is coded. Because so that the algorithm can pair the order below low and above high. Okay, that's how it programmed to do. It programmed to take the high and low. Understand? Now let's go on to the second important thing about the algorithm. So the way it coded, okay, it always take the high before it want to take the low, and it always take the low before it want to take the high. And ICT said this as a Judah swing on intraday, and in overall you can say that manipulation. You can use the word manipulation. So if market wants to go higher, it will take the low first. If market wants to go lower, it will take the high first. Why? It's because they pair their order above high. Okay, what they are gonna do, they are gonna take the price above the old high, and then they will sell or short above that old high, so that they can pair their order. Because they have so much order, they can't do that at the current price. They need to manipulate the market. Okay, because they have billions of dollars, trillions of dollars, they can't just sell and buy at the current price, at the same price. They need to manipulate the market to the higher or to the lower, so that they can position themselves. Algorithm can create the position in market so that it can move in a right direction. Okay, so first algorithm, there is a two algorithm as per ICT. The one is just move the market high and lower, and the second one is open the position. Okay, so first algorithm gonna move the market above high, the second algorithm gonna open the positions above that high, and then the first algorithm gonna dump the market. Okay, after they position themselves, after the second algorithm position themselves. ICT has said that the people in the bank, the big bank, okay, they also set their order above the high and low. Okay, they know that market is gonna go lower from above this high, market is gonna go lower. Okay, so but those trader are the banks trader. Okay, if you want to, let's say if you want to convert your currency $10 million into 10 million euros, okay, so you are gonna go to the bank, and a bank is gonna take your order, and that trader in that bank gonna buy below that low. Okay, once the main algorithm dump the price below that low. Okay, so you hear this thing where people say the trade like the banks. Okay, so that's how banks trade, but it's so much confidential. Okay, we will never know when they are gonna buy below the low or above the high. Okay, we just have this study that ICT taught us, so we rely on this study. Okay, we don't know the time. Okay, so we use the high and low and SMT to confirm that now they are gonna move the market in right direction. Okay, so again the second important thing is market manipulation in a wrong direction before it move in right direction. Means it will go higher first if it want to go lower, and it goes lower first if it wants to go higher. Okay, it's a manipulation. Now the third thing and most important thing, so it's high and low. You can enter in high and low, and you can exit the market at high and low. Okay, yeah, high and low can be your entry and exit point, both. Okay, for that you need to master the high and low PDRA, how market use the high and low, how algorithm use the high and low. So for that you need some time. It will take some time, 2-3 years. Okay, but you need to master the price action skill, price action reading skill, to enter at high and low, because it's not easy. You need psychology also. When the market goes higher above the high, you need psychology, that where you short the market in that pump, in that huge pump when everyone is bullish, you need that psychology that you are gonna short this big green candle. Okay, so it will take some time to enter at high and low. Okay, and why it do that is because market move for liquidity. And let me tell you, market is not move for only liquidity. Okay, it move higher so that they can short, and it move lower so that they can long. Okay, so it move for two things. First is the liquidity, and the second is to pair their orders, where they are gonna take the orders or pair their orders above old high and low. So algorithm is gonna do the two things. First, it will take the price above high, manipulation. Second, it will short the market above that high. So the reason why market goes higher and lower for liquidity is to pair their order, so that they can leverage the entire move. Okay, so market move for liquidity, first thing, and the second thing, why it move for liquidity, to pair their order. And where they are gonna pair their order means where they are gonna enter the market above high and below low, above old high and below old low. Okay, so remember this, and don't be a pattern trader. I have explained to you in just in general terms. Okay, I never show you in this presentation, I never show you the stop loss and the chart. Okay, why? Because it's just a explanation in general discussion. Okay, so you should not become a pattern trader. Okay, remember this in your trading career. Okay, don't be a pattern trader that, oh well, whales and big player are gonna manipulate the market below low. They don't sit in front of their computer. Come on guys, the algorithm move the market because it's how coded. Okay, it's gonna take the high and low because it's how coded. They don't sit in front of the computer. All this movement has been done by the algorithm. Okay, so don't become a retail ICT trader. Okay, remember this. So now let's go into the chart. Okay, and I'll explain to you high probability condition and low probability condition. What happen in high probability condition and what happen in low probability condition. Okay, so let's go into the chart. So there is a two kind of condition in market. Okay, only two. The first one is high probability condition, and the second one is low probability condition. So what happened in high probability condition and low probability condition? So in a high probability condition, market take the high and it will go down, okay, or it will take the low and it will go up. This is the high probability condition, okay. This is the high probability condition. And what is the low probability condition? Here it is same. Market are not gonna take the low. See, we dump, okay, we did not take the low. Same here, we dump, we still did not take this low. Same here we dump, but we did not take the low. Okay, so this was our old low. We took the high first here. See, we took this high, but when we go down, we generate some liquidity first and then we take this low here after January open. And why this happened? The first thing is why? It's because market are gonna take the high and low after the high time frame open or after the major time frame open. Okay, so look, this was our December 5th candle. Okay, we formed the high and low. After this high and low, let me draw this here. So after we formed this high and low in December, we took the high on 16 December, 15 December, 16 December, and then we remain above this low. Why? It's because market was waiting for the next month open, and it was not only next month open, but it was yearly open, quarterly open also. Okay, so market wait for the quarterly and yearly open. It means the major high time frame open. Once we open, we took the low, okay, and then we rally higher. Okay, look at this pump. Okay, so when you see the market is not going higher to take the high and market is not going lower to take the low, it's because the market is waiting for the right time. It is because market is waiting for the high time frame open. So this is the low probability condition. So you should wait for the right time. In low probability condition, market don't take the low and it don't take the high. It wait for the high time frame open. Once you see the high time frame open, it is gonna take the low or high, and then it will go higher and lower as per the price action. If it take the high, then it will go lower. It will take the low, then it will go higher. Now you see here this entire up move higher. Before this up move, we had this manipulation leg. So this is our manipulation leg to lower. Okay, so this is the manipulation lower, and then we go higher. Okay, inside this manipulation lower, you can see this is our manipulation leg higher. Okay, so for this move, this is our manipulation leg. Okay, for this entire up move, this is our manipulation leg before the old low. Now for this entire down move from this high to this low, this entire up move was the manipulation. As I said, when market move in right direction, it manipulate to the opposite direction. Okay, so it manipulate to the opposite direction so that it can take the low, take this low. Okay, so this manipulation leg higher was the manipulation leg for this entire down move. But if you look at this entire down move, then this entire down move become a manipulation leg for this entire up move. Okay, so what happened is, let me show you in this. So first, market will take higher, market will go higher, and then it will take the high. Why? Because it want to go lower. Okay, same thing when the market goes lower, it will take the low. Why? Because it want to go higher. So this up move become a manipulation leg for this down move, but this down move become a manipulation leg for this up move. Same thing here, this down move from this high to this low become a manipulation leg for this up move, but this up move become a manipulation leg for this down move. Okay, so market just do this thing. Okay, it manipulation higher and then it will go lower, it will manipulate lower, it will manipulate to the downside to go upside. Okay, now let me show you another condition in market. So look at this, same thing, we generate the liquidity here, we take the liquidity here, we took this low, okay, but we still have this low here. Okay, so market generate the liquidity. Why? Same thing, it was waiting for the right time. What? Yearly open. See, this is the yearly open, 1st January 2024. After yearly open, it dumped, and we have this SMT here, and we took this all low and all low resistance liquidity, and we go higher. So this low was low of the year, low of 2024. Okay, so we consolidate, we generate the liquidity, and on the right time we took all those liquidity, form the yearly low, and then go higher. Look at this low probability condition, same. We were just going higher and higher. Look, just higher and higher. So these are the low probability condition, and why? It's because accumulation and distribution. So here it is. Let me show you. So in accumulation and manipulation, market are not gonna go higher or lower, it will stay at the same price. Okay, so if this is our accumulation, so it will remain at the same price, it will not take the low, it will not take the high, it will remain inside the high and low. Okay, and it will generate the liquidity above high and below low. Okay, in the meantime, algorithm is gonna accumulate the buy order. If this is the accumulation, if this entire price action, if this entire consolidation is accumulation, let's say accumulation, then they are gonna buy at low at the same price. Okay, once the higher time frame open and once they have done the accumulation, they complete the accumulation, they will manipulate the market to the low, and they are gonna pair their main order, majority order there, and then they will move the market higher. Okay, and how to confirm that this is the end of accumulation? You found SMT at this low. Okay, in correlated asset class, if you are looking at the price action at in Bitcoin, then you found SMT with Ethereum. Okay, so you found the SMT here, and that's where you enter long here to confirm the end of accumulation by SMT, and you can take leverage the entire higher move. So this entire box is a low probability condition. Inside this condition, you are not gonna see the algorithm will take the high and low. Why? Because the purpose of algorithm is not to take high and low. The purpose of algorithm is to accumulate the position, to accumulate the long. Okay, so it just long. Okay, they are gonna open, algorithm is gonna open the long position every time it dump. Okay, inside this consolidation. But once they complete their accumulation, the first algorithm will dump the market. Okay, and then they will long or buy below these lows inside the consolidation, below this consolidation, and then they will take the market to the upside. Now the same thing happen in distribution. Okay, wait a second. So they are gonna sell inside the consolidation. Price will go higher, they will sell. Again, price will dump, but it will not dump much lower. Why? Because distribution. Once they complete the distribution, the last time the first algorithm will move the market higher, and then it will take the market to the lower. Okay, so they will sell their majority position here, and here. Okay, they will sell some position here, so they will hold the market, algorithm will hold the market, and this is what low probability condition. Okay, market will not go higher, market will not go lower. Why? Because they are selling right now and they want to sell at the same price. Okay, inside the box they want to sell at the same price, so they are not gonna move market much higher, and they are not gonna move market much lower. The market will remain at the same price or inside the certain price, inside the few $1,000. Okay, inside the few $100, depend on the time frame. If it is a high time frame, then few $1,000, and if it is a lower time frame, then few $100. So the algorithm will not move the market higher or lower in accumulation and in distribution. So that entire price action become a low probability condition. You are not gonna get high probability trade, and it's hard to trade. If you are new, then it's hard to trade the market. Okay, but if you have experience, then you know that the market will go higher from this low, above this low. If you have experience in trading the range, then you can trade this distribution and accumulation. And if you don't have experience, then you might hit the stop loss so many times inside the range. Why? Because you think that now market will go higher and go lower, but market just remain inside the consolidation, and it will just hit your long position stop loss and short position stop loss. Okay, so these are the two conditions. Okay, so I can say that this is the low probability condition. Okay, this, wait a second, this is the low probability condition. Okay, now what is the high probability condition? This is the high probability condition. Where is the arrow? Down arrow, here it is. So now you understand, this is the low probability condition where market is not going to take high and low. Okay, why? Because we are in accumulation or distribution. Okay, let me remove this and just use consolidation. So consolidation means accumulation and distribution. For that you need to read the higher time frame price action. It is a accumulation or distribution to understand, to find out that this is the accumulation and this is the distribution. For that you need to understand the higher time frame market maker buy model and higher time frame market maker sell model. Okay, I will make the new video on that market maker buy model and market maker sell model, but for now just use this word consolidation. So consolidation is a low probability condition where market are not gonna take the high and low. Once market break out from that high, okay, break out from that consolidation, okay, what it gonna do? It will take the high or it will take the low based on the market maker buy and sell model. Okay, if it's a accumulation, then it will dump, and if it is a distribution, then it will pump. Once it pump, it become a high probability condition. And if you get SMT there, okay, as I explained, if you go back in this video, I explained what is the SMT in correlated asset class. If you get SMT there, then it's a high probability condition when market is gonna take the high and then it will dump to take the low. Then you can position yourself there. So vice versa in bullish condition. So this is the bearish condition and the vice versa in bullish condition. Okay, so remember this high probability and low probability condition in this video when you are gonna take the trade according to high and low. By using the high and low, you need to understand this high probability and low probability condition first. Okay, so understand we are in accumulation, distribution means consolidation, and wait for the breakout. Once we break out, check for SMT. If there is no SMT, then you should not take the long and short trade. If there is SMT, then you can use that high to short the market, or you can use that low to long the market, but by using SMT. Okay, so this is the two things that you need to understand if you want to use high and low in your trading. Okay, so that's it for today, guys. Okay, I hope you understand. If you have any confusion, you can tell me your confusion in comment box. Okay, I will answer your question. Okay, I'll see you in next video. Okay, manage risk as always. Good luck and good trading.